Today we will be doing journal entries on dissolution of a partnership firm. When a partnership firm dissolves, all the assets and liabilities of the partnership firm are settled. Settled in the sense that they are sold and they are paid off. Typically speaking, all the assets are sold and all the liabilities are paid off. Now, when you are selling the assets, in your question, the balance sheet is given to you, and accordingly, you are selling all the asset. Sometimes it may happen there are some unrecorded, any unrecorded asset which is given in the question. Any unrecorded asset which will be given in the question, a line will be supplemented to that say a motor car. Now why is a motor car an unrecorded asset? Is it will be used, I mean the time period is over, it has become useless, it has become scrap, but it is lying outside the business premises. Okay, outside business premises, when a motor car is there, nobody is bothered about it. When they are closing the business, they realize, oh, this asset is still lying over there. Similarly, it can be an old typewriter. See, the questions of today's age may not have the word typewriter, but if you get an old print, typewriter word may be there. It may be printer, or it might be some furniture. Anything can be there which has been written off. I repeat, which has been written off in the previous accounting year. It does not show in the question balance sheet. It does not show in the question balance sheet. It has been written off. But the question tells you that the unrecorded asset, whatever is the unrecorded asset, it has given you say 6,000 rupees. So question will be 6,000 rupees received from an unrecorded asset. So for this, the journal entry will be very simple. Cash is coming in the business and it is coming because of realization account. So your narration will be being unrecorded asset now realized at rupees, now whatever the rupees is, say 6,000. So this is one condition of how to treat unrecorded asset. Any unrecorded asset is given in the question for realization journal entries. Unrecorded asset was realized, so your journal entry will be cash to realization. Similarly, if any unrecorded liability, if any unrecorded liability has to be paid off. So what is happening? You have an unrecorded liability. Now how will you have an unrecorded liability? Supposing you had a creditor, you were supposed to pay him say 5,000 rupees. There was a creditor for 5,000. The creditor went out of town. He is not there anymore in the city. He didn't realize that he has to collect money. You also forgot about him and you just close your books, you wrote it off, you finished it off. Afterwards, he comes and tells, see, I have to get 5,000 rupees from you. This is any kind of unrecorded liability. Supposing there was a bill, there was a telephone bill of the business which was not paid. So that becomes an unrecorded liability. It may happen. There are so many things we may forget. So in case there is an unrecorded liability, the journal entry will be realization account debited to cash account, because in this case you need to make the payment. So I repeat, at the time of dissolution of a business, any unrecorded asset, if it is sold and realized, the journal entry will be cash to realization. And if there's any unrecorded liability, journal entry will be realization to cash. Here also note, if the asset is of 6,000 rupees, it has been realized, this is the full amount that will come in the journal entry. Because these assets or liabilities are not shown already in the balance sheet. It is not shown in the balance sheet. Thank you.